Welcome back to Your Real Estate Voice with Barb Schlinker. This is the weekly radio show that informs and educates you on how to buy or sell real estate with Barb Schlinker, the owner of Your Home Sold Guaranteed Realty. Now, Barb, as fewer people bought homes in 2023 due to higher interest rates and this low inventory environment, what are your thoughts on where the mortgage interest rates are going to be going in 2024?
Well, Richard, I do a lot of research on this. I check the rates every single day. I never used to do this years ago, but it's pretty important. There are some buyers out there that are waiting for the rates to come down. I don't think we're ever going to see 3% interest rates again. I'd be really shocked to see it, in the next 20 years, because that was kind of an artificial setting that happened after the mortgage meltdown. The Fed went out and they were buying bonds to pay, to buy down the interest rate to get the Fed money rate really, really low, which meant the interest rates ended up being really, really low. So this was all caused by government intervention. And then last year, when he raised the rates, or actually in 2022, late 2022, when he went from 3% to 7.5% in a very short period of time, that created a whole bunch of sticker shock. And it also eliminated a lot of the buyer pool because they couldn't afford homes anymore. Um, and so what we've been hearing in the press is the Fed is going to, oh, he might keep the rates the same. Oh, he might lower it a quarter. Oh, maybe he won't. So I listen to these news shows every day about this. And I kind of gathered some data from what the experts are. Although, in my view, if you're listening to experts that have a certain motivation, like they're the National Association of Realtors economist. Of course, he wants to keep people positive, or maybe the Mortgage Bankers Association. They want more mortgage applications. You have to take that with a grain of salt, really. Um, but basically, the rates have ticked up again. They were down in the mid sixes here just about a month ago, but they ticked up again because of strong economic data and strong job growth. Although the job growth really was mostly government jobs. It's kind of like the tail wagging the dog. It's crazy. But I think what we're seeing right now is the rates are up higher than they were a month ago by probably 0.5%. And they're more than a percent higher than they were a year ago. But we're seeing more sales and more buyer and seller activity in this local real estate market. And I think a lot of it has to do with people just finally adjusting and saying, all right, we want to buy a house, so we're going to have to find a solution to deal with it as it is. So as of this recording, the rates were hovering about 7.09% for conventional. VA is about 6.5%, and it does fluctuate daily, hourly, as we go in through the week. But what we have seen from December till now is the rates kicked up a pretty good, probably about 0.5%. Okay, now what does that mean? And how does it affect the market right now? Well, I don't see that it's deeply affecting the market at all. We're seeing more sales, more activity, and we're seeing inventory being low. We're seeing more and more offers on our own listings, and the median list price is heading up. So it doesn't really make sense. Inventory is going down, list price, median price is heading back up. So why do interest rates matter? Well, for buyers, they matter a lot because it's about affordability. So I went on a bank rate. They had an average rate on their website. They have a mortgage calculator. So I just put in the price of a $500,000 home, assumed that they're going to put 20% down, which is not that common. But anyway, um, and so it calculated a payment based on the rates today, principal, interest, taxes, insurance. And the payment came in just over $3,031. Okay. And if you see a 1% dip in interest rates for the same scenario, that would mean that the payments would drop $267 a month. And that's quite a bit of money for a lot of people. So there are a lot of people that are using their cash reserves to buy down the interest rate to get a lower payment to make their homes more affordable. We're also seeing a lot more people get what they call a 3-2-1 buy down, where they buy down a couple of percent for the first 3 years and kind of gradually it rises and levels off after the third year. So it makes it affordable up front and then slowly starting to adjust to whatever the rates are. But if you are thinking of making a move, we have low inventory. That's going to help home sellers, but it's absolutely critical that you price your home realistically versus optimistically. And that's part of what we do is we help our home sellers figure out how to price their home right. So they don't have to wait for it to be on the market month after month, hoping it will sell. My name is Barb Schlinker. I'm the broker owner of Your Home Sold Guaranteed Realty. Barb has the buyer's team. And I'm also the host of this show, Your Real Estate Voice. And what we're talking about right now is whether mortgage interest rates are predicted to drop in 2024. And next up, we're going to deep dive a little bit more into what the real estate experts are saying across the country, people on a national basis that might be really diving into this data way more than I am. So if you are thinking of making a move and you would like to discuss with us how to position your home to get the most money, have us go over how we present your home to our buyers, including our exclusive list of 27,818 buyers in waiting, our buyers on Zillow and Realtor.com, our citywide buyer agent network, our guaranteed sale program, and our worry-free move-up program. All you have to do is call us at 719-301-3900 or go to barbhasthebuyers.com. Richard?
Barb, we're talking about whether mortgage rates will head down in 2024 and how that affects the real estate market. So, Barb, what are some of the experts saying for their predictions for mortgage rates in the year ahead?
Well, it's all over the board, to be honest with you. I'm seeing some that are saying it's going to stay the same. I've seen some that it's going to really drop low. I don't think anybody can perfectly predict the future, but you can make a pretty good educated guess. So we'll go into which each one of these particular experts have said, and you have to consider where they're coming from. But at the end of the day, affordability or the lack thereof absolutely keeps buyers from buying homes. It's all about payment for them. Most people don't pay cash when they buy homes. And that's really why the builders are offering huge incentives like buying the interest rate down, paying their loan closing cost, or letting them use the money to upgrade their home. Um, I know from personal experience that buyers are out there looking in force and they're looking for a good buy. I have a home right now that's in negotiations, which was priced probably 20% below market because it had an unfortunate event take place at the home. And even with that knowledge, I've had dozens of showings every single day, and I've also received about 15 offers. So these buyers know that there was an unfortunate death in the home, but they're still jumping on it because the home itself is very nice and the price is very, very aggressive. And I think buyers kind of have that almost intuitiveness. Like they're looking at what they can find on Zillow and Realtor.com. They're like, wow, look at that home for that price. What's going on with it? Let me go see it. And I got 15 offers on that one. So I know from experience that these buyers are out there looking to grab a home. And many of them made a really good offer on that property, even well over asking price. So according to Barb, I'll be the momentary expert what I think is going to happen with mortgage rates in 2024. I believe the inventory will continue to stay low because there's so many people sitting on those low interest rates that it would just be too expensive for them to go from a 2.5% to a 7% rate. So what the result of that, it will keep prices rising slowly. And I think the mortgage interest rates are they change, just so you know, they change by little tiny bits throughout the week, every day during the weekday. But I think in general, they're going to stay relatively the same until we get later into the summer, potentially towards mid-August. And of course, what I think is going to happen is the Fed's going to lower the rate just before the election heats up. So the economy looks a little bit better. And magically, the rates are going to go down. But I wouldn't really worry about that because I don't think it's going to be enough of a move to keep buyers from buying homes right now. So don't let that stop your moving plans and don't let that worry your moving plans. If you want to move in the summer, then plan to move in the summer. Don't even worry about it. It's going to stay probably pretty stable in the sixes and low sevens, I believe, probably through most of the year. And I believe right now, with the very, very light inventory that we have, that the prices are gonna stay strong, and it's a great time to sell a home because you have fewer homes to compete with. So I did some research looking at different experts, Mortgage Bankers Association. Their prediction of rates was probably the lowest. They even went down into the fives, which I was really surprised. Same with Fannie Mae, down into the fives, although I don't see it. Realtor.com, again, they're a web company. They just said 6.5. Okay, whatever. Redfin's a real estate company. They said 6.6. According to the National Association of Realtors chief economist, and again, he's trying to encourage real estate agents. That's his job. He's claiming it's going to be between 6 and 7%. There was one group that was the only contrarian one that thought the rates are going to go up a little bit. They're called Palisades Group Chief Investment Officer. He thought 7 to 7.25. Fannie Mae said they're going to average 7, but go down in the fourth quarter of 2024 into the mid sixes, maybe even upper fives. And then we had another economist come out and say that mortgage rates are expected to stay below 7% in the coming months, and inflationary pressures will ease the path for the Fed to cut rates. And so what the Fed's looking at is inflation, employment. We have tons of government employment right now, and the status of wages. Those will impact whether or not the Fed decides to lower the rates or raise the rates. So my name is Barb Schlinker with Your Home Sold Guaranteed Realty, and Barb has the buyer's team. I'm also the host of the show, Your Real Estate Voice. If you are thinking of making a move, we'd love to talk to you. We offer a free in-home consultation on what to do and what not to do to get your house ready for sale. We'll go over all the closing costs so you know exactly how much you'll put in your pocket. If you're not ready now, you can go on my website, barbhasthebuyers.com, and click on Get Home Value to get a really good idea of what the market's doing for homes just like yours. It's a human doing that search. It's not an automated value. And then if you did want to meet with us, we could sit down and show you all of our exclusive 27,818 buyers in waiting, our buyers on Zillow, our citywide buyer agent network, our guaranteed sale program, and our worry-free move-up program. If you are thinking of making a move, call us 719-301-3900 or go to barbhasthebuyers.com. Richard?
You're listening to Your Real Estate Voice with Barb Schlinker. She's the host of the program and the proprietor of Your Home Sold Guaranteed Realty. And if you're thinking of making a move, call Barb 719-301-3900 or visit barbhasthebuyers.com. When we come back, we'll be discussing, do real estate agents undervalue or worse, inflate their value opinions to get sellers to sign agreements? You want to stay tuned for that.